Thanks so much for tuning into this earnings conversation with Apollo Hospitals, Mr. Krishnan Akhileswaran Johnson, right now to talk about how he thought the quarter went by and what are the things that he can tell us about how does the second half or what does the second half hold in store. Great having you. Thanks for joining and hope all is well. Can you sum up the quarter for us? Because when I try to marry it with what you did in Q1, right? An increase in ARPOBs in the mature and the new hospitals of Apollo, proportion of local patients, treated, continued to improve as well. So has that trend continued in quarter two?
Yes, thank you so much, Neeraj, for having me today, and good morning, everyone. Yeah, we had a very good quarter. It was a quarter of all-round growth across all our segments or business divisions, as you call it. As you know, Apollo today has three business segments separately, right? One is the hospitals or the healthcare services. The other, as we call it, the HealthCo, which is the omni-channel pharmacy distribution platform, including the digital health. And the third one is the Apollo Health and Lifestyle, which includes the diagnostics business and the retail health. So all the three businesses did very well for the quarter. You know, our consolidated versus last quarter, we grew 14% on the consolidated revenues to 4,251 crores. That was our quarterly revenue across the company. The EBITDA before Apollo 24/7 cost was 740 crores for the quarter. And that was a 17% growth versus the sequential quarter. And PAT again grew to 220 crores. And there was a 29% growth over the sequential quarter. We had an extraordinary charge of 15 crores, which is a one-off capital gains tax, which we had, which is why the reported tax was at 204 crores. But otherwise, it was a 220 crore PAT. So overall, there has been growth versus the sequential quarter across. Healthcare services, as you rightly said, which is the hospitals, grew by 12% in this to 2,265 crores. And there, the margins also expanded by 129 bits to 25.2% in this quarter. So we have a 25.2% EBITDA margin and 571 crores was the EBITDA that we recorded in this quarter. Again, AHLL in Apollo Health Lifestyle, the diagnostics business in particular, crossed the 100 crore landmark for the first time in a quarter. And this is a significant landmark because we have been late entrants in the diagnostics business, particularly compared to some of the others which have been in the industry for a long time. And crossing 100 crore in a quarter is a significant milestone. And, you know, it was also aided by a lot of Apollo 24/7 or the online, which gave 30% of this diagnostics business itself. Pharmacy had a stupendous growth in the quarter, actually. Again, because, we crossed the 2,050 crores overall for the quarter, which was the combined pharmacy sales. And what got recorded in our P&L was around 1668 crores because we have the distribution of the pharmacy which gets recorded here. The front end is a separate company, and that doesn't come into the Apollo Health, Apollo Hospitals results. So that was a 1668 crores. Apollo 24/7 again, for your perspective, crossed 294 crores of GMV in this quarter. That's a large GMV. It was a 34% growth over the previous quarter. 294 crores in this quarter versus the trailing quarter, I'm saying it's a 34% growth, in line to cross 1,500 crores of GMV in this year in Apollo 24/7. And by the end of the year, we hope to be second largest in the Apollo 24/7 segment.
Okay. Let me try and break up some of these. Now, the hospitals business, in Q1, you had both a YOY and QOQ growth in EBITDA margins. You had guided for an annual expansion of 150 basis points. I heard you mention that you have expanded margins further in quarter two. Is this the kind of run rate that you anticipate to continue? And would this, therefore, what you've done in Q2, would that largely be the average for the year on the hospital side?
Actually, we still have headroom for growth in the hospitals business, because if you look at the hospital segment today, we are at 68% occupancy. This compared to 60% of Q1. Clearly, there has been a significant uplift in the occupancy at 68%. This quarter also was aided by medical admissions. But with that said, we still have headroom from a 68%. Our aim is to get to at least 70% by end of the year and really go beyond 72, 73 by next year. So one is the operating leverage. When you have the hospital going from a 68 to 72, one is the operating leverage should kick in. Second is our case mix is also improving now towards high-end cases. We are the largest oncology operator in the country today. We have the highest number of transplants that we do in the country today. So a lot of high-end surgeries that is coming in, proton therapy, cancer center, etc. All of that should also aid in the margin expansion. There is a focus on cost that we have launched recently, which should again help in 100 bips of margin expansion. So I would like to believe that there is still headroom for growth, at least 200 basis points headroom for growth in the margins over the next 12 months, 12 to 14 months.
Wow, that's a strong statement. And just wondering, what's the near normal um, utilization or occupancy that you reckon you could reach to on an average? Because you will consistently have this influx of new hospitals that you will bring in, which might bring down the average, occupancies per se. So what's a normalized, um, numbers that you would have in a usual scenario, so to say?
I think we can easily cross the 72 to 73% range, go closer to the 75, and that's a sustainable number. And the new hospitals that we are adding, just so that we are clear, we are adding 2,000 beds over the next 4 years, but most of the stock will come at the end of 3 years.
Okay.
Begin to come in after after 3 years. So we still have headroom for growth. So ideal situation is we would like to bring our existing hospitals to the 75% in the next 3 years, by which time the new stock come in as well. So that would be an ideal situation.
Okay. Now, diagnostics, you mentioned a landmark. Q1, of course, because of the high COVID base of the corresponding Q1 in the last year, Q1 had seen a degrowth. What's been, while you reached a landmark relative to this thing, what's the quantum of growth that you did, if you will? And how do you expect this to shape up? Because clearly, when I speak to diagnostic companies as well, they all talk about how organized is just 15-16%, and therefore there is room to grow for everybody. Can you give us some color here, not just for FY23, but slightly longer term as well?
Sure. So I think we should admit that, see, the Apollo brand name is very well reputed in healthcare services. So that's definitely aiding the Apollo diagnostics business, and also the Apollo 24/7, which is now the online platform, which is also available and has 20 million users. Is also enabling the pharmacy, the diagnostic growth particularly. So what they have done now is, it's not just, so it's a very new model wherein, almost they have 900 phlebotomists who actually collect your samples at home now. And if you place your order today, you'll get it the next morning. So they are quite fast. They're focusing on turnaround time, focusing on expansion across. Quarter on quarter growth has been a good 25%. Yeah, just the sequential quarter. From 80 crores odd, they are at 100 crores. And well in tune to get to the 500 crores per annum run rate by end of this fiscal, which means by Q4 they will cross the 125 crore number. So that's what they are focusing on now, and then eventually go to the 1,000 plus crores. So there is a lot of focus, especially in primary care and diagnostics, because if you look at the whole, one of the biggest advantage that we have as Apollo is the network effect, right? Because we have always been the tertiary care providers. We then moved into closer to home with pharmacies, and the largest pharmacy player today. And now with Apollo 24/7 and the omni-channel and the digital healthcare services app, we are able to also increase our condition management and some of the other offerings that we have. So diagnostics will definitely be enabled by that, especially the B2. And the big thing for us is it is completely D2C. We don't have any other. It's all coming directly from the consumer. Significant consumer awareness, which is what is pushing the diagnostic business. By end of the year, we are now at 15% margin there. We would be, and because we are growing that business, as you rightly said, and eventually we will get to the 20 plus margin as well.
You reckon 1,000 crores at the end of 4 years from now, or could it be earlier?
No, we would like to do it in 2 years.
2 years.
The end of, that's right. So which means our growth will have to be, our growth aspirations internally is over 30% on the diagnostics, particularly year on year.
Got it. Okay, now Apollo 24/7 Q1 GMV was 215. I read somewhere that you were wanting to deliver 1,500 crores in FY23. Was that correct? And if so, how has Q2 been? And do you expect a bump up in the second half?
So absolutely. In fact, it's doing very well. From 215 crores, as you rightly said, the GMV which was there in Q1, the Q2 GMV now is 294 crores. It's a 34% jump from Q1 to Q2 itself, and there is a further jump you should expect in Q3 and Q4. such that they will close the full fiscal at approximately the 1,500 crores GMV, which we have guided. They are doing almost now 50,000 deliveries every single day, which includes the 50,000 deliveries, meaning it includes a combination of pharmacy. It includes diagnostics, which they do 2,500 diagnostics every day, and they also do 3,000 teleconsults every single day. So it's a combination of all of this. So the pharmacy delivery, see, we are the largest pharmacy platform with over 5,000 stores, and the back end is all sorted, right? So it's more the front end and the distribution that they are focusing on to ensure that the deliveries really happen on the same day. We were the first to start with the 2-hour distribution promise for the consumer, have been able to broadly meet it so far. And the same day, all the medicines by the same day is what the teams are now focusing on. So it is an exciting journey. Yeah, there is a burn in that business, and we should agree that it is part of this the business of consumer acquisition, etc. But we are quite certain that in 2 years, the entire Apollo 24/7 business itself will become EBITDA neutral. The entire business, I'm saying, just the pharmacy backend, as you know, is throwing cash for us. We have a 500 plus crores of cash which comes from the pharmacy backend, and a 600 odd crores of burn, right? Roughly around that number. So net there is a 100 crore burn in that business, but we are quite certain that the 600 crore burn will also become neutral in the next 2 years as the business keeps growing.
Got it. So just to wrap things up, the growth numbers seem to be there. If I heard your first answer correctly, once the utilization or the occupancy rates for hospitals and the growth in diagnostics and some of the others starts working up even further, I would reckon that the operating leverage kicks into way meaningfully. Would you reckon that where you are right now on the console operational metrics, with the growth that you're penciling in, you would be at a much higher level end of FY24? And what would that mean for profitability? Also, any kind, actually, let's finish this answer and then I have one fun question.
So I think, yes, you are absolutely right. We would have to see 2 points I would like to say is, our consolidated numbers today is not representative of each of the business lines, right? If you look at each of the businesses today, if you just look at my hospitals business, 265 crores of revenue this quarter, 570 crores of EBITDA. And the PAT, if you look at only for the hospitals business, it's close to 300 crores. Whereas the reported PAT is 220 crores, which means there is a 24/7 cost, which is getting consolidated in the overall PAT and the overall consolidated numbers. Whereas Apollo Health and Lifestyle is now getting close to PAT neutral, and they are now growing the diagnostics business. So to look at it is better to deconstruct a P&L like ours or a balance sheet like ours into the 3 lines of businesses that we are focusing on, which is, as I said, the hospitals, the diagnostics and the retail health, and the omni-channel pharmacy and digital healthcare services, and understand that fuller for someone to really appreciate the value that we are creating and the bump up in profits that can be expected in 2 years. I would not like to I would not like to guide anything particularly on that, but if someone understood that properly, you would realize that there is definitely a lot of headroom for growth, especially in the other 2 businesses, which are now dragging a bit on the PAT on the financial perspective.
Got it. My final question, any corporate action? Now that there is a bunch of things that could be happening, any corporate action on the anvil in the next 6 months?
We are always looking at options, right? We are always open for M&As. We are looking at acquisitions, bolt-on acquisitions, etc. across. There is nothing specific that I would like to guide you today, Neeraj, but we are always looking at it. Apollo 24/7 again is something that we have said we are looking at an investor coming in there for growth, as well as ensuring that the AHEL money is used for the hospital expansion itself, because 2,000 beds over the next 4 years is over 3,000 plus crores of capex, which will be done from Apollo AHEL as well. Of course, we have a very comfortable balance sheet. If you look at the debt, we are at a net debt of 1,200 crores versus even if you look at only the healthcare services EBITDA, that's over 2,000 plus crores. Only the healthcare services, assuming that the other 2 businesses take care of their own cash. So we clearly have headroom for growth, but always looking for options is how I would leave this for now.
But but nothing that is likely to happen in the next two months immediately, either on the investor front or otherwise, or difficult to say that right now.
Difficult to say that right now is how I would say. But Apollo 24/7 is garnering a lot of interest from a lot of investors. And we would like to, because, the growth now is, there was this period when, that there was a digital healthcare services across the country. There was some issues across the world where obviously VC funds dried up, etc. This is not a VC that we are looking at. We are looking at long-term investor who understands the value and the network effect, etc. that we are doing. And there is hence a lot of interest now because we are also delivered on the numbers. So we would see something happening on this front, but I would not want to guide you whether it's happening now, but it will take probably by the next 6 months, we should have some better news here.
Great. All the best for that. And thanks so much for talking to us today, and have a great remainder of the quarter.
Thank you so much, Neeraj. Thanks.
Pleasure was ours. Viewers, thanks for tuning in.